it is now pretty apparent that the COVID impact in the economy and in the financial markets last year is officially a financial recession. And so I was reading online somewhere and somebody was talking about like, what is a recession? And so the actual definition of a recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. So if you have one quarter where GDP falls, that's just one quarter where it goes down. If you have 2 quarters in a row where GDP falls, then you have a recession. And so in Q1 and Q2 of 2020, there was 2 successive quarters of GDP decline, and therefore we got the recession. And that was the shortest recession in history. And the reason why it's the shortest recession in history is because the second shortest recession in history was in 1980 from January to about July of 1980 was considered a recession, so about the same time frame, but a little bit longer. And the longest recession in history, you have to go all the way back to 1873. From 1873 October to March 1879, 65 months. Almost 10 times longer was the longest recession than the shortest recession. There's obviously been a ton in between that 6 months to 65 months. And so when we start to look at this, we can actually see the GDP drop in the graph. So we've got a graph here that I think we're going to pull up that shows that GDP dropped 31% in Q1 last year. And then we had a 33% boomerang July through September in Q3. And so when you start to actually look at this, this is all of 2020, is the chart, which is showing the annual change in GDP. We still had a negative 3.5% GDP in 2020, but that really was front loaded in Q1, Q2. And even though we got the recovery in Q3, Q4, there was still a negative 3.5% in 2020. Now, why is it that Q1 and Q2 were such significant? Remember, Q1 was a 31% GDP drop in the first quarter, but in Q3, we had a 33% kind of recovery and into Q4. Well, a lot of that comes because of the monetary stimulus. And so if you look here at the various months, you had in April 2020, which ends up being Q2, the change from previous months was over 20 million. Right? Is that right? And that's in thousands. So 20,000 thousands is 20 million was the change from the month before where it went down as well. And so you can see that the economic carnage that occurred in March and April of 2020 was not only significant, but it led to incredible uncertainty and fear, which then led people to say, what is going on? The markets are going down. All of the businesses are shutting down. I'm sitting in my home. What do I do? They turn and they consume media. And so that's where you got this explosion in online consumption. And that's ultimately what leads to that big decline. Now, as we think through this, you can see GDP by month. I think we've got a chart that we're going to pull up here that shows from May of 2021, we're at $22.74 trillion of value. If you go all the way back to January of 2020, it was at $21.85 trillion. And so we've added almost $1 trillion of GDP in the last, call it 18 months or so, 17 months. And you can kind of just track it as we went from 21.8 all the way to that bottoming of 18.5 in April. Think about that for a second. We had a decline of over $3 trillion in GDP from January 2020 to April of 2020. So a 4-month period, $3+ trillion decline in GDP. And then from the bottom, we went from 18 to 22, where we see over $4 trillion from the bottom of that kind of graph all the way up to the $22.74 trillion in May of 2021. And so ultimately what this leads to is that you get the recovery, but the recovery is a combination of businesses opening, the government lockdown going away, the vaccinations kind of spreading so people feel more comfortable going outside. But it's combined with the monetary policy. And that monetary policy and kind of fiscal and monetary stimulus ends up being a massive boom for the economy. And so now if you look at the GDP numbers in the last 2 quarters, we saw 4.3% in Q4. We saw 6.4% in Q1. And then we're seeing an estimated growth in Q2 of 2021 to be 7.5%. And so when you see kind of these massive drawdowns, but then a significant recovery, 4% in Q4, 6% in Q1, and over 7% in 2021. That ends up being a lot of fiscal and monetary stimulus. There's a quote from NBER which says, economic activity is typically below normal in the early stages of an expansion, and it sometimes remains so well into the expansion, which is a direct kind of explanation of what's happening here. So what do we take from GDP numbers falling off a cliff in March and April, and then now it feels like, just go, baby. GDP is just flying, and it feels like, growth is inevitable regardless of what happens.
Well, I was looking at the unemployment numbers, and that's still interesting, right? We're at 6% in June was the unemployment number. That's still the highest it had been since 2014, 7 years ago, 2015. So the numbers are still really elevated. The Federal Reserve says that they think we'll be closer to 4.5% by the end of the year and 4% next year. But those are recession unemployment numbers, right? It doesn't feel like we're out of the woods yet, although technically by the definition we are. It'll be interesting to see how those numbers normalize over the next 12 to 18 months.
Do we get a call to a recession? Like technically it meets the definition of 2 successive quarters of negative GDP growth, but is that a real recession?
Well, that's what I think is one of the most important things is if you ask like the normal person, we're probably still in a recession, right? And based off the definition of what a recession is, we got out of it in April.
Yeah, basically Q2 of last year we're out. So now we're a year removed from the recession. But there's a lot of people in the world who they don't feel that way.
That's what I mean by the 6% unemployment, right? If 6% are still unemployed, that doesn't feel like post-recession numbers necessarily. But when you look at it from one of the things I'm looking at is since 1945, the recessions, there have been 4 that lasted 8 months, 1 that lasted 6 months, and this one was 2 months. So much, much, much shorter than anything else we had seen in history. Just not, I know you said the 6 months earlier, but it's just not even close to anything we had seen previously.
Because really all of the GDP contraction was in March and April last year. Yeah. And other than that, every single month last year was growth of GDP. And so they call it 6 months because it's technically 2 separate quarters, and that's what makes it a recession. But really it was 2-month recession. And that's what makes it the shortest in history was there's only those 2 months of GDP contraction.
Yep.
I mean, this number, the 3.5%, it's crazy to think that in 10 of the 12 months of 2020, there was GDP growth. But in the 2 months that ended up being the decline was so great that it actually superseded the growth that happened in the other 10 months.
I mean, 33.4% from July to September was a GDP growth. That's crazy.
Yeah, that's a crazy number. Well, they were just handing out free cash. They were just injecting it all over the economy.
A lot of that is from the policy, the stimulus, stuff like
that. If you want the inflate gauge, sure, go to thebestbusinessshow.com. Let's go.
Well, it's also important to note that it was the longest economic expansion on record before this, right? So it was 2009 to current almost last year.
2020.
2020. So that's,
the longest bull run in history.
128 months, right? So it's long.
You know why, right?
Why?
Even before the recession, they just brought it out, right? Yeah. I mean, they were just manipulating.
Well, since the financial crisis, when you look at the balance sheet, you could see it on there.
Yeah, if you remember the balance sheet yesterday, it looked like we just go along, whoop, and then we just never go back down, whoop, and just keep getting the inflection points, which is what ultimately drives.
Someone needs to make one of those charts where you put like the comments of like Powell talking and the Federal Reserve chairs talking about we're going to lower the balance sheet, and put it on the chart.
Since you're a co-head of the Best Business Show research team, you'll make that for tomorrow.
No, perfect. I'm asking the viewers. Someone help us out.